Another day this week and another set of data out of the UK. Today is retail sales. And so we're up by 0.5% on retail sales. This is the month-on-month figure, and that's almost the number we were expecting. We were expecting that to gain by 0.6%. I will say that the prior month, the drop the prior month has been revised upwards, so that net perhaps balances itself out. Now, as a result, we really don't see much movement in the pound, and perhaps the pound as exhausted looking at UK data as the rest of us this week, because we've had CPI, of course, that came in a little below estimates, but the jobs market looking tight, the growth story, as expected, pretty resilient. A lot of data out in the UK. Yeah,
and you tie it to the jobs data, which, of course, is really crucial when you think about the consumer and you think about these retail numbers. We saw wages then cooling, but still above that 5% level here in the UK. So wage growth slowing, but the unemployment number reducing, or at least the number of workers in work in the UK increasing. So, as you say, the jobs market broadly looking relatively resilient, but people's wages are coming down a little, still above 5%. And again, the retail sales print essentially in line, doesn't really change the calculus you'd have thought for the Bank of England. We were speaking to Credit Suisse chief economist just in the last 10 minutes. She says November is the right time. Markets are right to be pricing in the next cut from this Bank of England, not September, but November.
OK, and it is interesting, given the things that were supposed to drive this number higher this month, you know, they were obviously there, but whether they're as strong as we would have expected, so maybe that leaves the Bank of England cuts in place. So, for example, the warmer weather, yes, believe it or not, we did have some, Tom, our memories, perhaps it doesn't stand out in my mind as much as all the rain, but the football as well as supposedly boosted spending. So the fact that we had those positives and we didn't quite get to the estimate, I don't know, maybe at least leaves those Bank of England cuts on the table. Interesting, after that growth number yesterday, Bloomberg Intelligence talking about the risk of overheating in the UK economy in the second half of the year, which, if we have a Bank of England that's cutting interest rates, is a really interesting conversation that we'll no doubt pick up.
And it's a stunning reversal, isn't it, from the recession environment that we're in. Briefly, but you've had 0.7%, 0.6%. So expectations that the growth in the UK will continue to grind higher. It presents, of course, a brighter picture for the new Labour government, but still they are constrained in terms of the fiscal spend.